When I speak with clients, I would say what you're touching upon, the breadth of the rally, is absolutely key in terms of portfolio construction. So this obsession in looking at the S&P 500, cap market weighted vis-a-vis equally weighted, how is it moving? You know, March to May, we saw some breadth. Now it's back to be very concentrated. Is absolutely the North Star in portfolio terms that people are looking at. If I take a step back, I think we should cherish the fact that 2024 has given us more breadth than 2023. 2023 was in equity land, US, tech. Now, this year, it is still dominating, but it's been, we've seen Japan being added. There's a lot happening in Europe as well, and we should talk about how the election...
We're going to.
Exactly.
Oh, don't worry, we'll get there.
And so, again, I see that element around, for sure, the structural AI transformation, the dominance in the US remains a theme, but there has been a step change vis-a-vis last year. Again, Japan and Europe, I think, being two areas where I see significant more movement than last year.
But how much of that is a fiscal story as well? And I'm going to bring the dots to. We're talking a lot about it from a kind of bond market perspective in terms of what the fiscal spend is doing in terms of things like deficits and how you price it in. But in terms of the stock story, it feels like the companies within AI, even the chip making space, are the companies that are getting government contracts. Some of these names are trading the way that defense names trade. Is that how you kind of value it and price it and find the sweet spots?
Yeah, that's a very good point, which is, it goes back to the argument around, is the structural element with all its components, including external support, dominating, or are we getting into bubble territory? From our perspective, we're still overweight tech. It's clear that there's a lot happening, but if you take a step back, earnings are delivering at fundamental level, and so again, it is not in bubble territory. And I think it's really this element around a rewiring of the economy, a mega force that is playing out, that from a portfolio construction perspective, investors have the opportunity to position towards. So again, taking a step back from the noise, that remains intact pretty from my perspective. And again, the numbers show it. So if I look at global flows in June up to yesterday, which is when I look at the numbers, we've seen 110 billion flowing into exchange traded products. Of that, 80 billion, north of 80 billion, is in equities. And within equities, 56.5 is US, dominated by tech.